Okay, everyone, welcome. Thanks for joining me. I'm doing a quick revision lesson on statements of changes in equity. So bonus issues, rights issues. I'll talk about debentures, dividends, bank loans, stuff like that. I'll talk about that quickly. But I got an email earlier today, and it was, what are your tips in general for an accounting exam? Nothing like revise this, revise that. What are your general tips for just how do you prepare? Well, number one, you've probably been told that 1,000 times before, but reading the question is the most important thing, honestly. Make sure you read every detail of it. It makes such a difference. Sometimes, even how they word it is a bit tricky sometimes. Keep to the basics. I don't know how many times I've drawn that T account up with the assets, expenses on the debit, and the liabilities and income on the credit, but just keep to the basics. Think ins and outs. Put yourself in the shoes of the business. Am I receiving money? Am I giving away money? Etc. etc. Just keep to the basics. Don't overthink things. Think like tax. That's money out tax. Don't overthink it in a way. Always double check. The amount of times I made a mistake when I was typing values into my calculator was ridiculous. But just keep typing everything into your calculator twice. Do it twice. Also, if you cost of sales, remember you don't add them all up. You're adding cost. You're adding open inventory. You're adding purchases, but then you're taking away closing inventory. So just make sure you're keeping to the right method. It's all in the method. I was looking at a past paper on Accounting 1 before. You get 1 mark for getting the bottom of the balance sheet correct, that little value at the end, and you get 1 mark for the right profit in your income statement. It's like a 20-something mark question. 2 marks are for the answer, the overall answer. So make sure you're doing all your workings, because that's what they're looking for. They're not looking for the answer in a sense. They're looking to make sure, can he or she calculate the depreciation? Can they work out the cost of sales? Can they work out how we've made that accrual or prepayment? That's what they're looking for in a sense. And probably the most cheesy one, but never give up. I was sat in my Accounting 4 exam about a year ago, and I was thinking, oh my god, I'm not doing that well right now. Because I'd done well in the first 3, and I knew I needed an A to get into the university I wanted to get into. And I thought, right, I'm just going to just be ruthless with this, just write everything I can, put all my method down, make sure I do everything I can, and it worked, thankfully. But there's the 5 tips I'd say are just general tips for helping you pass your exam. So now on to the actual video you'll want to see. So it's going to be a revision lesson on statements of changes in equity. So there's 2 types of issues. We've got bonus issues and rights issues. So a bonus issue. What's a bonus issue then? Well, it's simply when we issue some shares, the shares issued, and they're issued to shareholders, existing shareholders, so people who already own shares. Probably in the name actually, shareholders, but anyway, free of charge. That's key. Free of charge. We don't charge the shareholders for giving them shares. We don't charge them for giving them the shares, basically. So you're probably asking us, well, why? Why would we give out shares for free? In a sense, it means we're just going to have to pay more dividends in the future. Well, one thing is, I mentioned dividends. Well, it'll keep shareholders happy. So say if we've not got the funds right now to pay a dividend, we can just give them shares instead for free. Simple as that. It doesn't cost us any money, so we can just give them some shares. And also the other one is restructure our capital section. So you can like play around with the revaluation reserve, etc. It's just basically an accounting trick really for restructuring it. So let's start there. So the next one is a rights issue. What's a rights issue then? Well, basically it's the same as a bonus issue, but we do charge the shareholders. So same as bonus issue, but do charge shareholders. So we don't give them out for free. We're actually going to receive money. So when you say, "Oh, why do we do this?" Well, the basic answer is we get some cash from it. We receive cash. So you see what I'm doing when I say we. I'm putting myself in the business's shoes. I'm thinking, oh, I receive money. So it just makes it easier to think about. So another word for cash, liquidity. It's a good use of terminology. Liquidity is basically when you have cash, basically. Having a lot of liquidity is good. You can pay off your expenses. You can't pay off your expenses with profit, can you? So, quick steps. How do you calculate rights issues and bonus issues? Well, in the question, they're probably going to give you. It's probably going to say £2,000 worth of shares, and each share is worth 50p. So, we need to go from that monetary thing of £2,000 to how many shares there is. So we need to calculate the number. That's terrible. Number of shares. That is currently, so as of now, before we've done any issues. So then it might be, we've got X amount of, we're going to issue 2 new shares for every 1 in existence. So if there's 100 in existence now, we're going to issue a further 200. So we're going to have 300 in total. So calculate number of new shares. Just abbreviate number. Number of new shares. And then we've got the number of shares. So let's calculate the value of them shares. So you see what we're doing? We're starting off with a number. We're given like as I said before, we've got like £2,000 worth of shares. We've got to calculate that. We're gonna change that to a number of shares, so an n value. We have 1,000 shares. Then we're going to change that into how many new shares we're going to have, and then calculate the value of the new shares. Okay, one thing that tripped a lot of people up when I was doing accounting was debentures. And one of the most simple things to calculate when you basically just revise it, basically. So it will say like a £1 million debenture, and it'll be say 20 years until we repay it all, and we're going to do 5% interest. So how does this work? Basically, what you're going to do is you're going to do each year. So each year we're going to pay 1 million times by 5%, which is 50,000, I believe. I hope that's right. And what we're going to do with that is that's going to be paid every single year for 20 years. So that's 20 years. Each year 20 years. So we're going to pay that 20 times. And then at the end of the 20 years, so end of loan, so when the loan matures, we're going to pay the 1 million as well. So basically the total cost of this debenture will be 20 bracket 50,000 plus 1 million. I don't know what the value of that is because I've just made the numbers up, but that's basically, it's 2 million, I think. It is 2 million. So the total amount of that loan is 2 million in today's money. Well, not today's money, yeah, basically. That'll be your answer in an exam though, basically. So you think, it sounds kind of silly borrowing 1 million, repaying 2 million, but it's very good because we're only paying £50,000 each year, so it's a bit gradual. And by the time we need to repay that million at the end of the loan, we might have made a lot of money, so it doesn't really matter. So anyway, I'm going to go on to a past paper. Accounting to Jan 2013, and it's basically just what we've done besides I need to calculate dividends. So it's all blah 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 at the top, really. It's just giving you context. Then got our values. So ordinary shares 20p each, monetary 1,250, share premium 25,000, retained earnings, and then we add them all up. So during the year ended 31st December 2012, the directors approved the following actions. February, payment of a dividend of £1.50 per share. Let's highlight that. The dividend was paid on all shares in existence on the 1st of January 2012. So should we just do that anyway? We'll do the first question. So calculate dividend paid on February 2012. So I'm just going to go through my steps basically. So I'm going to calculate the number of shares right now. Number of shares. So 1,250. So I'm going to take 1,250, and I'm going to divide that by the value of each share, so 20 pence. So that's going to become 0.2, and that is 6,250. So basically, like we can do it in a bit of a reverse way. So we've got 6,250 shares. We times each of them by 20 pence. We'll get that value basically. So just think, always make sure you look at this. We've not got that many shares. We actually have, well, 5 times that, so 20 pence each. So that's how many shares we have, and we're paying a dividend of £1.50 per share. Well, that's quite simple. It's just the dividend is going to cost £1.50 per share. It's just going to be number of shares times by £1.50, which gives us a dividend of 9,375. And that's it, 3 marks. Dividend 9,375. So where are we? 4B. I'm going to have to keep the question paper. Okay, calculate the value of the bonus issue of shares. So that relates to May. So 50 bonus issue of shares on a basis of 50 new shares for every 1 in existence right now. So I didn't read the question earlier before when I was doing my workings, and I did one new share for every 50 in existence, and I looked at Mark's scheme, I got it completely wrong. So just backing up what I said earlier, always make sure you're reading the question. So how many shares do we have right now? Well, we have 6,250. That's how many shares we have right now. So we've got number of shares right now. Number of shares, I'll put currently. So I'm going in a chronological order. I'm not writing this now on the 31st December. I'm going through it as if it is May. It is May now. We've just done that bonus issue right now. So currently number of shares is 6,250. So number of new shares. This is basically them steps I used earlier on the little like revision sheet I made. 50 new shares for every 1 in existence. Well, we've got 6,250. I'm going to times that by 50. So we've got 50 times 1 new shares basically. So 3,12500. So that's how many shares we have now. Okay, what it wants is it wants the value of them shares. So I'm just going to put value of new shares. So you see, it's just playing around with the number of the shares, how many there is of them, and the value of them. It's just playing around with that. So value of new shares, 1, 2, 3, 1, 2, 500, and they're worth 20 pence each. So I'm just going to times it by 0.2, and that's going to give me 6,500. 2 marks. It's basically an easy 2 marks as long as you know your method. It's just going back and forth between values and numbers. So calculate the dividend paid in September 2012. Okay, well the dividend this time is 30 pence per share. So the £1.50 per share has now gone. Forget that. 30 pence per share, and it was paid on all the shares in issue on the 31st of August 2012. So we've got all these shares here. We've also got all the shares from here. We've just issued 50 times shares. So we're going to have to add these 2 values. So there's this many new shares here, original shares, and we've got new shares. We're going to have to add the number of shares from each of these. So shares in existence, or shares currently. See, I'm keeping in chronological order, putting myself in the shoes of the business. So at the start we had 6,250, and we've just brought out 3,12500 new ones. So that's going to give me 3,18750. So that's how many shares are in existence right now after the bonus issue. And the dividend, I don't know how on earth this is worth 5 marks, but an easy 5 marks I'd have to say. 3,18750 times by 30 pence per share. So that's going to give us 9,562 5. So that's 5 marks, basically just 2 equations. We're adding the number of shares we had from the start and from the bonus issue to give us how many shares we have now, and then that's how many shares we have now, so we can just times that by the price we're paying per share of 30 pence, and we've got the dividend. So it's that simple. So now what we're going to do is we're just going to take all that information plus a bit more from the additional information we're given and put it into a statement of changes of equity. So so basically we're going to have our basically our brought down in a sense, what we started with. Then we had, let's have a look. We have a revaluation in April, so why don't we just put that in? There was an issue of shares, so let's just put bonus issue. We made some profit as well in the additional information there, but we still need to take into account our tax, so we'll just put profit for now and I'll work it out later. And we had dividends, and then we'll basically carried down to the 31st December. So now I'm at the end of the year now, and I'm going to put all my values in. So 1st of January, what am I going to do? Well, I'm just going to stick these values into my 1st of January column. So 1,250, 25,000. We didn't have anything in the revaluation reserve, and we had quite a bit of retained earnings. 725. Okay, that's okay. Okay. So revaluation of the non-current assets of the business resulted in an increase in the value of assets of 150,000. So let's say, for example, our assets were worth 50,000. They've been revalued now to 200,000. So the revaluation is just 150,000. That's the value that they've gone up. Okay, the bonus issue, the issue of shares. So basically, what we're going to do is just take the answer we've got from B, the value, because we don't want this. We don't want 312,500 anymore, because what this is all in terms of money. You see, it's not in terms of number of shares in a sense. So ordinary shares, we've got 62500, and as always, we take that amount away from our share premium and revaluation reserves. That's what I said about restructuring our capital. So you always go to share premium first. So I need to take away 62,500 away from these columns in a sense. So I'm going to go to share premium first. That's what you always go to first. That's obviously not 62,500. It's not high enough, so I'm going to have to wipe the whole thing. But 150,000, that's going to cover the rest of it, so 37,500. So now these two values cancel out that in a sense. They add up to make that. That's what you do when you do a bonus issue in a sense. So profit, we made a profit, and I'm going to do my workings here. So we are given a before tax profit. So what do we need to do to get our after tax profit? Just take away tax. So where are we? So the profit for the year ended was 356,840. 356,840, and we were given a tax figure of 71,368. Because this is going to go into our retained earnings now. Well, there's no point in putting the 356,840 in, because we're not going to get some of that. Tax is a cash outflow. I'm going to lose money in a sense. So there's no point in putting it in there because I'm going to lose it in tax. So I might just work out the value after tax. So 285,472. So 285,472. Profit doesn't affect anything else. Just go straight into your retained earnings. Okay, dividends, I believe we're on to now. Yes, okay, so we had two dividends. We had Part A, Part B. So I'm just going to you just add your two dividends together. It comes to 105,000. I know that, but just if you've got the question paper in front of you, just make sure you're working it out yourself and you understand why. So I'm going to add them both together, and we're paying this. We're paying this out. We're giving this to our shareholders. We're losing cash, so it's a negative. Also, make sure you add the two dividends together, because if you did it separately, so if you had dividend here, and you had two separate dividends, so you had dividend February, dividend September, and you had the different values, you'd only get 1 mark. That 105,000 is worth 2 marks. So there you go. So just make sure you're putting your dividends together, for instance. So that comes to 0, 25,000 minus 25,000. That comes to 63750. This comes to 112,500, and this is over a million now. 103,2,197. And also this row here, it's only worth like 1 or 2 marks. It's all in here, and it's all in these questions, and this. It's all in this. So it doesn't matter really if you get this bit wrong. It's always just in the workings. That's what I said earlier. It's all the method. So that's it really. That's it really. Of course, always email me if you've got any questions, any suggestions. Well, thanks for watching anyway, and I'll see you in the next video.